Hello guys, how are you doing on this Friday here, the last day of the week with regarding to trading? And we have PCE data coming out in 2 hours roughly. I think that will stir up the markets quite heavily. And yeah, we shall see how it acts there. Until then, I will give you like a Twitter update here with the people that I follow. So if you are on Twitter, you should definitely follow these guys. They are really cool. Each one of them has its own way of doing things, but overall, I find great value in these guys here. And yeah, as always, if you like the content, thumbs up and all that good stuff. Follow me here on Twitter, YouTube, and also Substack. So yeah, let's get into business. It's been 4 days, 3, 4 days since we've done this the last time. So maybe some of the charts is a tiny bit old. Sometimes a day or two in the markets can do a lot of changes. So here we have the next big trade. Again, I just want to illustrate you or show you this illustration here. That is the ideal buy for investors, basically the 30-week moving average. You can see the base here is getting broken, retesting, and then we're in this stage 2 uptrend. And really, to keep it very, very simple, you just want to be investing when in this phase over here, more or less, if you want to keep it really, really simple. So for the new guys, definitely study this. Great thing. Rock bottom entries here with the gold to silver ratio, which is also at a very, very, very important moment here. This is from 3 days ago, so I think we are a tad higher, to be honest. But again, we have different trend lines as well. Again, I think the PCE will be the peak of the gold to silver ratio in this move up here. So the retesting is done, and we are rolling over into the lows over here at roughly 60. That is my case. That's the big neckline for the 10-year head and shoulders pattern. I think we are very due for that move down. And today, or when they are going to have the FOMC, I don't know if it is today or next week, but within a few days, we have the FOMC again with rate hike or rate cuts or neutral, whatever. They will come out and show their hand. And I think that's when things are going to roll over in the gold to silver ratio. I do, however, think that when we get down here, we're going to have a huge spike back. The reason is, that's when I think the overall markets is going to take a big, kick to the teeth, and that will drag everything down, really. Hedgehog Trader, a cool guy here with SILJ, silver miners. You can see here we have the 50 moving average. We're trying to, again, a lot of indicators. I don't personally use them, so I don't know how to interpret them. But again, I can see a lot of them is crossing the zero line, which I assume is good. Momentum is slowing down, and we're actually potentially at the low point here. Remember, this is only like 1 week worth of trading. So, but yeah. Hedgehog again here. Breakout on the way after 4 years. So this is the XAU gold miners divided by the equal weighted SP500 ETF. You can see we're actually breaking out here. You can see the lows roughly in this zone here, 0.65, 0.68. That's the low. We have the high there at roughly 1.5. So that is our range. If this were to perform the same, we're going from where we are now at roughly 0.9 to 1.5. Dollar trader here, Natgas, a lot of stuff. He's always writes a lot of detailed stuff, which is really cool. You can see the support there at 2. We tested it, we came in, and now we're trying to get back above the 2.22, which is basically the pivot low there. You can see the breakdown here, retestings and the flag. So again, that gas again could be in for a big move here. This was posted 2 days ago, so maybe we have broken already. I don't know. Patrick Karim here. Uranium bulls needs to see this to resolve upwards, and this is basically Cameco versus the SPX. So you can see here he has the 1 year, which is the blue, and the 3-year moving average, which is the red. So the 1 year here is almost getting broken here. This is the monthly candle. So we have maybe a few left, but we're about to break down from the 3-year uptrend, which is not ideal. the long-term 3-year moving average is still, sloping up heavily. So depending on how it acts here, Cameco could be in for a dry spell versus the SPX. Dollar trader again with the UR here. You can see that the bulls are eager to reverse this move as soon as possible. Yesterday, the bulls showed some strength with following Friday's indecision candle. So you can see here indecision here a lot. And yesterday we had a mega indecision candle, and I think we are at the end of this trend here, to be honest. But again, it has been a pain for the past, I don't know, quite a few weeks and months here for the uranium trade has been really, really difficult. US oil with the great Martis coil spring the next few weeks, a big move is expected for sure. You can see the 12588 wave here has been complete. And which way we go, again, you don't know, but yeah, oil is definitely in for a mega move one way or the other. Obviously, if we start to crack down here, that is recession time, big time recession. So in gold, we trust. Again, this is not technical analysis per se, but the latest edition of our 60/40 portfolio is dead. You can see here that when gold peaked out in 1980s, again, the 60/40 portfolio has just performed really, really well. And initially, the first 20 years, it did well. It still did well. You can see, 6, 4, 2%, but now it is negative. So again, the the big play, the big 60/40 play is no longer working. So, and the funny thing is that, we have institutions, you have pensions funds and all that, they're still alleged to buy 60/40 portfolios, and they are going to get wrecked. BHP, which is an oil company, this is from 2024, all the way down here, beautiful symmetry again, waiting for a breakout either way. Again, sometimes, this is all you need, like a simple chart. You wait for the break to the upside, or if it breaks down, if you want to short, you can short it. But again, wait for the break above 58 roughly here on the BHP. Blake, important spot for tech here would be an understatement. We have Microsoft, SMCI, Apple, Amazon. Again, what I like about Blake is that he keeps his trading setups really simple. And as I've been saying like 1,000 times, that's not a bad thing. But really simple, doing it over and over again, just rinse and repeat. He knows, it's basically a numbers game for him. And you can see here, this is Microsoft, a 2-year uptrend. We're about to tag it. We also have the SMCI, the Supermicro computer, also at support here. This only goes back roughly half a year, but again, we have supports down here at roughly 600, 700-ish. So again, expect some sort of bounce here. If we break lower, that's obviously a very different scenario. You could argue that you have like a bear flag kind of thing going on there where we have broken down. And also here you have like a topping pattern, head and shoulders. So again, overall, with a topping pattern and a long bear flag, potentially, it looks pretty gnarly there for SMCI. Apple also, you can see this goes back only 3 months or so again, sitting in a huge support trend line here. Again, I do not know. This is from yesterday. Okay, so we will see today if we can make or break here or into the next week. Last one we missed, that was Amazon. Same thing again, just sitting at that, roughly 8-month trend line here. Huge moment there for tech. If we break down in these big players, that is a problem. Here we have, this is the NASDAQ 100, goes back roughly 20 years, 30 years. This is what happens when the NASDAQ 100 dropped more than 3% in one day. We had that a few days ago, and at least 20% of the yield curve was inverted, and we have that now. Play short bets. So you can see whenever we had that big drop there, you can see that after that, that is potentially the beginning of something extremely, extremely nasty. So Rashad here with the senior gold miners, the GDX, is retested after the breakout. You can see here clearly going back 4 years. This is a beautiful chart. One reason why I'm really, really bullish on gold miners. You can see horizontal support there at roughly 36. The trend line, little bit of a peak out here, coming down, massive breakout, retesting now. So hopefully, you know, we hold here, and yeah, gold miners, gold. Dollar trader here on coffee again. Again, long, beautiful text. I'm not going to read that out for you. You can check that out yourself. But basically, coffee here, support below. We have a trend line here. Maybe it should be a bit more down here. But anyways, you know, you can see we have a huge breakout. We're retesting in a decent bull flag here. Again, I expect coffee to go way higher. If you zoom out on the 40-year time frame, coffee looks extremely bullish and could easily double, triple, quadruple here over the next few years. So quite nasty. I like coffee, but it will be, I think, will be very, very expensive. Grady here with one of his iconic, you can say, his kind of thing, you know, long-term ratio play here, the GDX divided by the SPY. So you have gold miners divided by the SP 500 on the weekly. Pretty textbook-ish kind of, you know, falling wedge here, beautiful, false breakdown, testing again, and now we are potentially about to break out here. You can also see across here 0.073 or so. We have that invert head and shoulders. So if we break that neckline and we break out from the wedge, gold miners is by far the better play compared to the SPY. No questions asked, in my opinion. Great job there. So that's all I had for you guys today. I will upload this this video to YouTube. And again, if you want to follow me, you know exactly where it is: Substack, YouTube, and on Twitter. And then I will go on to do the a few video updates for the members on Substack with different stocks and setups. Have an amazing day, guys, and enjoy the rest of your weekend. Cheers. Bye.